everyone. Today is Wednesday, June the 5th, and I've won $100 today because the Bank of Canada has cut their overnight rate by a quarter point, which means we should see our prime lending rate drop from 7.2% to 6.95%. Joe, what happened?
Well, it's happened. I mean, we've been talking about this consecutively for, it feels like forever, but that approach of trying to get inflation under control where the Bank of Canada wants it in that kind of 2% threshold, it's happened. They feel confident enough to make this move. So the good news is you're going to see variable rate, adjustable rate mortgages, lines of credit, anything that's tied to that prime rate, see a bit of payment relief now, interest relief. And this is kind of that good news story we were hoping for from a mortgage or a borrowing standpoint. There are some concerns because really if there's a drop, that could mean that the economy's not performing that well. And so it's finding that balance. So a couple things maybe you could touch on the economic side of things, on what this really means and why they feel confident to drop the rate now.
Yeah, they've seen the economy growth is slower than what they had forecasted originally. So we're seeing that inflation around that 3% mark, or 2% is what they had, correct me if I'm wrong, 2% is what they were hoping for. We are there for CPI. The friend that actually took the bet with me, his belief is that the US economy would keep our overnight rate up. But actually what we see now is their forecasted growth is down and job creation is much lower than what they had believed as well. Data came out since we made that bet.
Yeah.
So I was really hoping for it. So it sounds like as long as things continue on this trend, which many economists believe they will, we should see that overnight rate or prime rate continue to fall. But the government's been very vocal about the fact that they're going to keep close eyes on it.
Right.
Like they're not going to move it too quickly. There's still concerns about wage increases and spending.
Yep.
And so if that continues, they'll just hold prime, or hopefully they won't increase it again.
Yeah.
But,
Yeah. I mean, finally we're having some good news here on interest rates. And I think the other thing to keep in mind is there is the concern on what will this do to the Canadian dollar. The good news is, as of today, the Canadian dollar doesn't seem to really be impacted by this. We're also seeing the bond market, which fixed rates are based on, coming down. So we could potentially see fixed rates come a little lower than what they have been the last couple of weeks. So it is a good news story all around. When you mention the US side of things, I think it's important to realize that the Bank of Canada probably has another 2 or 3 movements before the US really has to. And it's just because the Bank of Canada's rate actually is more powerful than the US Fed rate in how it impacts the economy. So there's probably about a 2% spread before we really start to see impact. So although they will likely move at the same time, Canada probably can do it earlier than the US, and they've proven that by doing it today.
Yeah, it'll be interesting to see what they do in July.
Yeah.
So the next meeting is Wednesday, first Wednesday in July?
I think you're
early
close.
July.
It's in July.
They're going to take August off and then there's September. So I've heard rumblings that they could just hold in July to see what impact this has had and maybe revisit in September, kind of taking that summer off. We shall see. Either way, the first decrease in the prime rate for
way too long.
Yeah.
So,
here we are. It's a
Yeah.
good news story today.
for sure.
Thank you very much for watching. If ever you have any questions, please don't hesitate to reach out.